You're scrolling through your phone, seeing all these people talking about investing, building wealth, and you think, okay, I'm ready. But how much is this actually going to cost me? You've heard of StashAway. It sounds easy, automated, perfect for someone like you, but that nagging question remains, what are the fees? Are they hidden? Are they going to eat into your returns? Let's be real, nobody wants to get hit with surprise charges. We want transparency, we want to know exactly what we're paying for. So, let's dive into the nitty-gritty of StashAway's pricing structure, break it down, and see if it's actually worth your hard-earned cash. First off, StashAway primarily uses a fee structure based on a percentage of your assets under management, or AUM. Think of it like a management fee. This means the more you invest, the more you'll pay, but also, hopefully, the more you'll gain. The fee tiers are designed to be progressive, meaning the percentage you pay decreases as your investment amount increases. So, let's get into the actual numbers. Typically, StashAway's fees start at around 0.8% per annum for balances up to a certain threshold, usually around $25,000 or the equivalent in your local currency. As your portfolio grows, the fee gradually reduces. For larger portfolios, exceeding a certain amount, that fee can come down to as low as 0.2% per annum. Now, it's important to understand what this fee actually covers. It's not just for them holding your money. This fee covers StashAway's services, including portfolio management, rebalancing, and their investment strategies. They build and manage your portfolio based on your risk tolerance and financial goals. They also handle the rebalancing, which is crucial to keeping your portfolio aligned with your objectives. But what about other costs? Are there any hidden fees lurking in the fine print? Generally, StashAway is transparent about its fees. They don't typically charge for deposits or withdrawals. However, it's always worth checking with your bank or payment provider to ensure they don't have their own fees for these transactions. Also, it's vital to remember that the underlying exchange-traded funds, ETFs, that StashAway invests in also have their own expense ratios. These are usually very small, but they do exist. StashAway does a good job of selecting low-cost ETFs, so these expense ratios are minimized, but they are something to keep in mind. Now, let's talk about the value proposition. Is it worth it? For many people, especially those new to investing, StashAway offers a convenient and hassle-free way to get started. The automated portfolio management and rebalancing can save you a lot of time and effort. Plus, their focus on risk management can help you navigate the ups and downs of the market. If you were to try and replicate StashAway's portfolio yourself, you'd likely spend a lot of time researching, selecting ETFs, and rebalancing your portfolio. And you might not be able to achieve the same level of diversification or risk management. So, for many, the fees are a fair price to pay for the convenience and expertise that StashAway provides. Ultimately, the decision of whether StashAway's fees are worth it depends on your individual circumstances and investment goals. If you're looking for a simple, automated way to invest, and you value convenience and risk management, then StashAway could be a good fit. But if you're a more experienced investor who prefers to manage your own portfolio, you might find the fees unnecessary. Do your own research, compare the fees with other investment platforms, and consider your own investment style and goals. Remember, investing always involves risk, and past performance is not indicative of future results. With that said, thanks for watching, and until next time.